If you believe that Social Security benefits are no longer taxed, I have to stop you right there, because that belief is wrong, and it could quietly cost you money this year. Over the past year, millions of retirees came away with the impression that a big new law wiped out federal taxes on their Social Security checks. You may have seen the headlines. You may have even gotten an email from the Social Security Administration itself that seemed to celebrate it. But here is the flat truth. Social Security benefits are still federally taxable in 2026. The law that everybody was talking about did not eliminate that tax, not one line of it. And there is a second belief tangled up in the first one that is just as wrong. A lot of people now think there is nothing they can do about it either way, that whatever gets taxed just gets taxed. And that is that. Wrong again. There are real, live proposals in Congress right now that could genuinely change how your benefits are taxed. And separately, there is a brand new deduction already in the law that many retirees are eligible for, but have not actually claimed. So today we are going to tear this whole thing apart, layer by layer, until you can see exactly what is true, what is only a proposal, and what you personally need to do about it before you file. Because being eligible for a break and actually receiving it are two very different things. So where did this myth come from? Because a myth this widespread does not appear out of nowhere. It came from a very real piece of legislation passed in 2025, often called the One Big Beautiful Bill Act. That law did do something for seniors. It created a new deduction. But somewhere between the bill text and your kitchen table, the message got twisted into no tax on Social Security, and that phrase spread like wildfire. The problem is that the phrase was never accurate. The law never touched the formula that decides how much of your benefit is taxed. Now, who benefits from you believing the simpler, wrong version? Think about it honestly. A clean, exciting headline like "Taxes on Social Security are gone" gets far more clicks and far more attention than the truth, which is more like, a temporary deduction was added that indirectly reduces tax for some seniors under certain income limits. The accurate version does not fit on a bumper sticker. So the myth spreads because it is emotionally satisfying, and almost nobody has a reason to slow down and correct it. The people cheering the loudest are not lying to you on purpose. They are just repeating a headline that was wrong from the start. And here's the part that really keeps this myth alive. There is a genuine tax break sitting inside that law, but it does not arrive automatically. Nobody at the IRS is going to knock on your door and hand it to you. If you believe your Social Security is simply tax-free now, you may not bother to claim the deduction you actually qualify for, and you may not pay attention to the proposals that could change your situation next year. The myth makes you passive, and a passive retiree leaves money on the table every single filing season. Let me show you how I know all of this so clearly. My name is Emma Smith, and I am a state bar licensed estate attorney with more than 15 years helping families protect their retirement income. I have spent those years reading the actual text of these laws, not just the headlines about them, and translating that text into plain English for people who are trying to make careful decisions with a fixed income. And I can tell you that the gap between what people believe about Social Security taxes and what the law actually says is one of the widest gaps I have ever seen in this field. Let me also be completely honest with you about where I stand, because you deserve that before you trust a word I say. I am not selling you a financial product. I do not earn a commission on anything in this video, and I do not make a dime based on whether you claim a deduction or support any particular bill in Congress. Everything I am going to tell you comes from official sources, the Social Security Administration, the IRS, and the actual bills filed in Congress, and I will list every one of them at the end so you can check me. Because tax law is personal and the dollars are real, please also confirm your own numbers with a licensed tax professional or directly with the IRS before you act. My only job here is to replace the myth with the truth. And the truth has several layers. Layer 1 is the foundation, and it is the one that shocks people most. Your Social Security benefits are still subject to federal income tax in 2026, using the exact same formula that existed before the 2025 law passed. That formula is based on something called your combined income, sometimes called provisional income. It is your adjusted gross income, plus any tax-free interest you earn, plus 1/2 of your annual Social Security benefits. That single number decides how much of your benefit gets pulled into your taxable income. Here are the real thresholds, and I want you to write them down. If you are a single filer and your combined income is between $25,000 and $34,000, up to 50% of your benefits can be taxed. Above $34,000, up to 85% of your benefits can be taxed. For married couples filing jointly, the lines are $32,000 and $44,000. Below $32,000, generally none of your benefit is taxed. Between $32,000 and $44,000, up to half. Above $44,000, up to 85%. None of that changed in 2025. None of it changed for 2026. Read those numbers again, because that is the machinery the myth told you was gone. And here is the quiet cruelty buried in layer 1. Those threshold numbers, 25,000, 32,000, 34,000, 44,000, have never been adjusted for inflation. Not once since Congress first put them in place decades ago. When benefits first became taxable in 1984, only a small share of retirees earned enough to be affected. But because the lines never move while your cost of living and your benefit checks keep rising, more and more ordinary retirees get pulled into taxation every single year. It is sometimes called a stealth tax increase, and it happens automatically without anyone in Congress voting on it. That is layer 1. Layer 2 is where the myth really falls apart. Layer 2 is the truth about what the 2025 law actually did, because it did do something, just not what you were told. Instead of eliminating the tax on Social Security, the law created a brand new temporary senior deduction. If you are 65 or older, you may be able to deduct up to $6,000 from your income, or up to $12,000 for a married couple where both spouses are 65 and older. It is available for tax years 2025 through 2028, and then, under current law, it expires. This deduction is separate from your regular standard deduction and separate from the extra standard deduction seniors already get. Now here is the crucial distinction that the myth erased, and I need you to really understand it. This deduction does not change how much of your Social Security is counted as taxable. The taxability of your benefit is figured first, using that combined income formula from layer 1. Then, separately and afterward, this new deduction is applied to your overall income, so it does not exempt your benefits. What it does is lower the total income you pay tax on, which can indirectly reduce the tax you owe, including the tax tied to your benefits. It is a real break. It is just not the break the headlines promised. Let me make this human. Picture a retiree named Gerald, 68, living in Chattanooga, Tennessee. Gerald heard no tax on Social Security and assumed his benefits were now completely tax-free, so he almost did not bother checking his return closely. But Gerald is single with a modest income, and here is what is actually true for him. Part of his benefit is still technically taxable under the old formula, but because he qualifies for that new $6,000 senior deduction, his overall taxable income drops enough that his actual tax bill shrinks meaningfully. The myth told Gerald the tax was gone. The truth is better in one way and worse in another. He still owes tax on paper, but he has a real deduction he needs to make sure he claims. And that brings us to layer 3. Layer 3 is the one that costs people actual dollars, and it is the heart of everything I teach on this channel. Being eligible for that senior deduction and actually receiving it are two completely different things. Qualifying does nothing on its own. The deduction only helps you if it ends up on your tax return. And here is the trap. If you believe the myth that your Social Security is simply not taxed anymore, you might not even look for the deduction, because in your mind, there is nothing left to reduce. So let me tell you exactly how it gets claimed, because this is the actionable part. For the 2025 tax year, the enhanced senior deduction is reported on a specific IRS schedule attached to your Form 1040. And the good news is, you do not have to itemize to get it. Whether you take the standard deduction or you itemize, this deduction is available to you if you qualify. But someone, either you or your tax preparer, has to actively put it on the return. If you use a preparer, say this sentence out loud to them. I want to make sure you are claiming the new enhanced senior deduction for people 65 and older. If they look at you blankly, that is exactly why you needed to know it yourself. And there is an income limit you need to check, so nobody gets surprised. The full deduction is available if your modified adjusted gross income is under $75,000 as a single filer or under $150,000 for a married couple filing jointly. Above those lines, it phases out gradually, and it disappears entirely at $175,000 for singles and $250,000 for couples. So this is genuinely aimed at middle-income retirees. If you assumed you earned too much or too little to matter, do the math before you decide. Eligibility is not receiving. You have to claim it. Layer 4 is the one almost nobody is watching. Layer 4 is where we get to the proposal in the title of this video, and I am going to be very careful and very honest here, because this is exactly the kind of thing that gets twisted into the next myth. There are actual bills in Congress right now that would change how Social Security is taxed. One of them, introduced in early 2025, would exclude Social Security benefits from federal income tax entirely. Another proposal from a senator in Arizona would permanently eliminate the federal tax on benefits. These are real filed pieces of legislation. But here's the truth the headlines will not tell you clearly. A bill being introduced is not the same as a bill becoming law. Most bills introduced in Congress never pass. As of early 2026, these proposals to eliminate the tax on Social Security have not been enacted. They are proposals. They may move forward, they may stall, or they may change dramatically before anything happens. So if you hear someone say your Social Security tax is about to disappear, the accurate response is there is a proposal, and proposals are not law until they pass both chambers and get signed. Do not rearrange your finances around a bill that has not become reality. There is also a serious wrinkle that rarely makes the news, and you deserve to hear it. The federal tax on Social Security benefits does not just vanish into the government's general pocket. The money it raises flows back into the Social Security and Medicare trust funds. So proposals to eliminate that tax raise a real question about how those trust funds would make up the lost revenue. I am not telling you whether that is good or bad policy. That is not my job here. I am telling you so that when you hear a simple promise, you understand there is a complicated trade-off underneath it. A responsible retiree watches these proposals closely, but plans based on the law as it actually stands today. That is layer 4, and it leads straight into what all of this means for your money this year. So let us put real numbers on the truth. In 2026, the law as it stands means two things are true at the same time. First, your Social Security benefits can still be taxed, up to 85% of them, based on that combined income formula. Second, if you are 65 or older and within the income limits, you have a new deduction worth up to $6,000 or $12,000 for a qualifying couple that can meaningfully lower the tax you actually pay. Let me show you the size of that with a real example. Picture a married couple, Delphine and Marcus, both 67, living in Dubuque, Iowa. Their combined income puts a portion of their Social Security into the taxable column under the old rules, and they were bracing to owe more. But because both are over 65 and their income is under the $150,000 line, they qualify for the full $12,000 senior deduction. That $12,000 of income shielded from federal tax can translate into well over $1,000 in real tax savings for them this year, depending on their bracket. But only, and I mean only, if they actually claim it on their return. Now here is the flip side, the warning tucked inside the good news. If Delphine and Marcus had believed the myth and assumed their Social Security was simply tax-free, they might have skimmed their return, missed the deduction, and overpaid by that same $1,000+, all while thinking they had gotten a tax break they never actually took. That is how the myth costs real money. Not through a dramatic penalty, but through a quiet overpayment you never notice because you were told everything was already fine. The truth, claimed correctly, is worth far more than the myth ever promised. So let us turn all of this truth into action. Step 1. Figure out your combined income before you assume anything. Add up your adjusted gross income, any tax-free interest, and half of your annual Social Security benefit. Compare that number to the thresholds, $25,000 and $34,000. If you are single, $32,000 and $44,000 if you are married filing jointly. That tells you roughly how much of your benefit is exposed to tax. You cannot plan around a number you have never calculated, so start there. Step 2, confirm whether you qualify for the new senior deduction and make absolutely sure it gets claimed. Check that you are 65 or older and that your modified adjusted gross income is under the limits. 75,000 single or 150,000 married for the full amount. Then, when you file your 2025 return, verify with your own eyes or with your preparer that the enhanced senior deduction is actually on the return. Remember, it works whether you take the standard deduction or itemize, so there is no reason to skip it if you qualify. Do not assume your software or your preparer caught it. Confirm it. Step 3. Keep an eye on the proposals, but do not gamble on them. If you want to follow the bills that would change Social Security taxation, you can look them up by name on the official congressional website at congress.gov and read their actual status for yourself rather than trusting a headline. And if the law does change, this channel will walk you through exactly what it means. But for now, plan your 2026 finances based on the rules that are real today, not the ones somebody hopes will pass. Step 4. And please do not skip this one because it is the most important. Because this involves your specific income and your specific tax situation, verify your plan with a licensed tax professional or directly with the IRS before you act. A good tax advisor can also help you with something powerful called tax planning around these thresholds. For example, timing a retirement account withdrawal or a Roth conversion, so you do not accidentally push your combined income over a line and cause more of your benefit to be taxed. The thresholds are rigid, but the timing of your income is often something you can control. That is where real savings live. Now, I know I just gave you a lot of numbers, thresholds, and rules, and I would never expect anyone to hold all of that in their head. So I made you a free tool. I put together a one-page Social Security tax truth sheet that lays out everything from this video in plain language. It has the combined income formula written out step by step, the taxation thresholds for single and married filers, the new senior deduction amounts and income limits, and a simple checklist you can hand to your tax preparer so nothing gets missed. You can download it completely free at the link right below this video at Lead Magnet URL. There is no charge and nothing to buy. I told you at the start that I do not make a dime from any of this, and I meant it. This sheet exists for one reason, so that when you sit down to check your own return, you have the real picture on one page instead of a headline that was wrong to begin with. Print it, mark it up, and bring it to your tax appointment. And remember, it is a starting point to organize your thinking, not a substitute for confirming your own numbers with an official source. Now, here is what I want you to do with the truth you just learned, and I am going to be direct about it. This myth has spread further and faster than almost any I have seen, and it is spreading precisely because nobody is stopping to correct it out loud. So you correct it. Share this video with every retiree you know who thinks their Social Security is now tax-free, because that single wrong belief could cause them to overpay or to plan their whole year around a promise that is not real. Think of the people in your life who deserve the truth instead of the headline. The friend who has been telling everyone at coffee that the tax is gone. Your sibling who is about to file without claiming a deduction they qualify for. The neighbor who is nervously waiting for a bill in Congress that has not passed. Send this to them and say, "Watch this before you file because what you have heard is not the whole story." You are not being a know-it-all. You are handing them back control over their own money. Refuse to let the people you care about be governed by a myth. That is the whole point. And if you are the kind of person who would rather have the real story than the comfortable headline, subscribe and turn on the bell, because that is exactly what I do on this channel. When a proposal like this actually moves in Congress, or when a new deduction quietly appears in the tax code, I will be here to tell you what genuinely changed and what is still just talk, in plain English, with the sources to back it up. There is always another myth to bust and another dollar to protect. So calculate your combined income this week, make sure you claim what you qualify for, share this with someone who needs the truth, and I will see you in the next one. Stay sharp, question the headline, and take good care of yourself.